All right, all right. Good morning, good morning. How's everybody doing today? Nice Tuesday morning. We're getting ready to go through and look at our portfolios. But before we do that, I want to talk a little bit about the seasonal nature of markets. July is a very seasonal month, and we're coming into the month of July. Today is July 1st. Am I not correct on that? And what we're going to be doing is we have that little saying, go away in May and come back in July. All right. So July is a very seasonal month and generally has a tendency to be quite a strong month. And so we're going to go through and look at the seasonal nature. But before we do that, I want to do just a few PowerPoint slides. If you'll stick with me for a few PowerPoint slides, we'll do a little academic work and then we'll go over and I want to review our portfolio. I want to use our software to see if there isn't anything specific that we want to see in the month of July. And then we're going to go over and we need to take some profits on some of our trades. So we need to do that. And then at the end, we'll go over and review my universal basic income portfolio. There's not a lot going on there. We're just waiting for some options to expire. So, waiting for some dividends to come in. And we'll just talk about that just a little bit towards the end if we have time. I think we'll have plenty of time to get through everything we need, but we better get started, right? So let's jump right in, finding the best times to generate income in the financial markets. If you saw out on the little marquee, the little thumbnail said we were going to talk about the best time to and the easiest way to find stocks. So buy the right stock at the right time, I guess is the words I'm looking for. All right, so let's get started here. I have a little slide here, see if I can figure this out. All right, look at that magic animation. All right, here we go. Peter Ducker, professor at Newark University, author of 30 books on innovation and enterprise. He says the best way to predict the future is to study the past. All right, now we all know that past performance is not necessarily indicative of future results, but it's the best we've got. So we always look at the past, we always look at what the market's done in the past, and then try to make projections off of that to see the future. All right, it's not the best, but it's the only thing we got. It's the best we got. All right. So we just have to deal with what we got. And the next step here is when is the right time to trade? Let's try and solve the biggest problem traders have today, finding the right market to trade at the right time. All right. So timing is everything, as they say. All right. Donald Rumsfeld. Do you guys remember him? He had a little saying. He says, there are known knowns, which are there are things we know that we know. There are known unknowns. There are things we know we don't know. And then, of course, there are also unknown unknowns. There are things that we don't know we don't know. Right? Kind of a fun little saying. But, he was, of course, a politician and talking about war. But in this case, it works very much in the financial markets. All right. This is so perfect. When he said that, I was like, oh my gosh, that's the stock market if I ever saw it. There are known knowns. There's things that we know we know. All right. There are known unknowns, things that we know that we don't know. All right. And that's something you still know. You just know you don't know it, but you know about it. And then there are also unknown unknowns. They oftentimes say, what you don't know won't hurt you. Well, that's not true in the financial markets. What you don't know can hurt you very badly in the financial markets. All right. So we need to get a good, solid, broad understanding of what it is we're dealing with before we start to trade and before we start to get all crazy putting our money in here. We don't want to treat the stock market like a casino. All right. I oftentimes will say that it's the stock market is like a carnival game. I don't call it a casino because a casino is gambling in a sense that you have, it's mostly luck. Now there'll be people who say, well, no, you can have a skill at gambling. Yes, you can get skilled at gambling, but mostly it's just luck. All right. Maybe a few card games that you can do that you might be able to count cards or something and do something that they don't like you to do. That would put the odds a little bit in your favor. And so I don't call the stock market a casino because the stock market is not a casino because you can get good at the stock market. It's a skill that you can learn and you can apply that skill to the stock market and you can do quite well. And many, many people have proven it. I've proven it myself. I will show you my live real money account here at the end of the class. So you can develop a skill and you can do quite well at the stock market. And I know there's going to be people who say, well, I can develop a skill and I can be good at gambling. Okay, good for you. So there are a sense of that. I agree. But the stock market is more like a carnival game where you pick your tent, All right. I oftentimes say along the fairway, you pick your tent and you can get good at something. All right. So they have basketball hoops, right? You can throw basketballs and you can get good at doing that. Now, yes, they put the odds against you. They make the hoop a little bit smaller than you're used to, and they set it just a little bit further away than what you're used to so that it's different than what you've practiced on. And that's how they put the odds in their favor. All right. But it doesn't mean that you can't sit there and practice and become good at what they've got for you there. There's also, throwing darts. Now, they might bend or grind off the point, so it's not very sharp, and you have to hit the balloon a little bit more precisely, but it's a skill that you can learn and you can excel at. You know, they're going to put the odds against you at every step that they can. Throw those little rings on those bottles. That's a hard thing to do, but if you get good at it, you can throw those little rings on the bottle. So the the game is rigged. Yes, stock market game, it's rigged, but you can get good at it if you pick your tent and you practice and you study and you learn it. You don't have to be good at every tent. If you go to the carnival, you don't have to be good at throwing rings if you're good at throwing the baseball, right? If you get good at throwing the baseball, you don't have to be good at throwing rings. You just go down there. It's a job at this point. You throw baseballs, you make your money, and you go home. Or you win your big panda, all right? Whatever you want to call it. But I like to call it a carnival game because at least it gives you the insinuation that there's a little bit more skill involved as opposed to just luck. All right. So there are things that are unknown unknowns. There are things we don't know that we don't know. And so I want to talk a little bit about that. And we're going to go through and we'll define each one of these. So there's things that we know that we know. Now, one of the most common things in trading are recurring price patterns, right? Technical analysis is pretty common. Head and shoulders, 1, 2, 3, ABC tops and bottom formations, candlestick formations, hammers, hanging man, etc. These types of things are known knowns. If you've been trading at any amount of time, you've been exposed to this because it's one of the most popular common things about trading. All right. Now, trading, you have to think about it in a couple of different ways. It's a Me Too market. The market has a tendency to do things because everybody does them. It's a Me Too market, meaning that if you jump on, the trend is your friend until it bends or ends, right? The trend is your friend. And it's almost like self-fulfilling prophecy. So if everybody gets a buy signal, lots of people jump on those buy signals, and it self-fulfilling prophecy, it makes it happen, right? The market will run on these different setups. And so the trend is your friend. Once it starts to take off and go, you jump on the train and you go with it, and you can generally make money. All right. So that's the idea of known knowns. All right. So if everybody takes a signal from the MACD, which is one of the most common and popular indicators that there is, right? Lots of people watch it and lots of people trade using that tool, and they get a buy signal from the MACD. Well, lots of people are going to take that buy signal, and self-fulfilling prophecy says the market will move in that favor, in that direction, which is why you look back in history and you're like, oh, wow, look how often that the MACD worked. It's because it's self-fulfilling prophecy, right? Now, we can go down a whole nother rabbit hole where the large institutions who like to take advantage of retail traders will cause these types of events to occur so that they can take advantage of you. You start to buy, they start to sell to you. All right, that's a whole nother story. It's accumulation distribution. It's a very important model, but it's beyond the scope of this class. Okay, so just this one, let's just stay simple with the slides we've got here. This is the known knowns. There are things that we know that we know. Generally, recurring price pattern is pretty common. All right, there are known unknowns. There are things that we know we don't know. Now, I'm going to read some of these, and you're like, oh, yeah, that sounds familiar. I've heard of that, but I don't know what it is. All right, so these are known unknowns. Have you ever heard of sell in May and go away? Oh, yeah, well, I've heard Land say that. Seasonal sector rotation. Have you ever heard of that? Oh, yeah, that sounds familiar, but I don't know what it is. What about triple witching? Oh, yeah, that doesn't have that something to do with yeah, I've heard that. What is it? I can't quite put my finger on it. It's right there. Oh, what is that? I've heard of that. Don't know what it is. The Santa Claus rally. Oh, I think I know what that is. Santa Claus rally doesn't have to do with Christmas. Actually, no, it doesn't have to do with Christmas. It has to do with something around Christmas, but it's not Christmas itself. Oh, well, I thought I knew what that was. I guess I don't. I've heard of it. I just assumed it had something to do with Christmas. No, sorry. Santa Claus rally doesn't have anything to do with Christmas. It's around the Christmas time, which is how it got its name, but it has nothing to do with Christmas. Oh, I didn't know that. What? Oh, I guess I'm going to have to do a little research because Land's not going to tell me what it is, not in this class. You're going to have to come back to a different class to learn what that is. All right, the January barometer. What is that? Oh my gosh, that sounds really familiar, but I don't know what it is. I can't quite no, I don't know. It's a known unknown. All right, we have known unknowns. And then we have unknown unknowns. Oh my hell, an unknown unknown in the stock market? There's actually a lot of them. All right. There are things we don't know, we don't even know. And these are the things that can hurt you. All right. The DE or the John Deere rally. You ever heard of that one? Oh, never heard. No, never heard of it. Unless you've been in my classes, then you've heard of it. But what about the KO rally, the knockout rally? You ever heard of that one? Ooh. Oh, no, can't say I have. How about the soybean rally? You ever heard of that one? Oh, never heard of that one either. These are the patterns we're going to cover today very quickly. All right. So, first of all, I want to talk to you a little bit about commodity prices because commodities example these unknown unknowns easier than just about anything else. All right. So, um, it's easy to think about. Um, we have little sayings in the commodities market, but it's kind of comes around. You plant commodities at the same time every year. You water them and grow them at the same time every year. You harvest them at the same time of the year. So if you think about a commodity in that sense, well, you're going to have seasonal patterns that occur over and over and over throughout the year, right? In fact, we have a little saying about corn. It's called knee high by July, right? Knee high by July. So if corn is not knee high by July, well, we're going to have problems with the corn crop. That's going to cause the price of corn to go up, right? So maybe not enough water, too much water. These are some things that can affect the crops on an annual basis, which is going to affect the price, right? You plant them at the same time every day or every year. You harvest them at the same time. They're susceptible to damage. Too much rain, not enough rain, same time each year. So it causes these seasonal cyclical trends. Now this happens very cleanly in the futures market, but surprisingly enough, it happens very much in the stock market as well. So here's a few things in the futures market just for fun. Since 2003, gold prices have spiked higher 86% of the time in the month of February. Did you know that? That's an unknown, huh? February, pretty good month for gold. Since 1997, soybean meal has spiked higher 77% of the time in the month of July. There's your soybean rally that we talked about, right? Since 1982, U.S. hog prices have spiked higher 76% of the time in the February and March. Oh, wow, that's pretty cool. Coffee prices have spiked higher 76% of the time in the month of August since 1982, since I graduated from high school. That's kind of cool, right? Hold on a second. Losing my voice. 1 second. All right. Let's I turned my microphone off again, and I thought I turned it back on. Why did it not come back on? Damn it, damn it, damn it. All right. John's mad at me. Everybody's yelling at me. I turned it on. I swear I turned it back on because I went over there and I was like, turn this mic off, turn it back on. Shit, damn hell. All right. I think it'll let me back up here. We'll come back here real quick and review this. All right, one more. All right, I think we covered this, right? Stocks, additional historically repeating cycles and trends. So stocks have these cycles and trends. If you saw me talking, you could have at least read this one. Since 2010, Fortnite climbed average 14%. All right. So these stocks have a tendency to do this over and over and over again. So we have these recurring seasonal cycles and trends. And so markets have a tendency to climb. Since 2013, Match Group has climbed on average 26% in the month of December. All right. So Wall Street's calendar is what I call this. I call this the Wall Street calendar because there's events that happen and occur on a regular basis throughout the year, not only with the entire stock market, but individual stocks themselves. And so we have the fiscal year end, like taxes. We have quarterly earnings reports. We have the scheduled dividends, annual industry cycles, corporate obligations, holidays, Black Friday, Christmas. We have all kinds of things that will affect the price of stocks on a regular basis, right? Chad says, I'm going to know that you. Chad says he's going to come out with one. I thought you were going to say you're going to come out with some way of making sure that when I turn off my microphone, I get it flipped back on automatically. That would be a better feature. All right. So we have all these different cycles and trends. Now, there's also individual stocks that have specific cycles and trends to their industry, and that's where I was bringing up, for example, John Deere. John Deere, we call it the DE, or the John Deere rally, because between November 19th and January 6th, every single year, 100% of the time over the past 17 years, back to 2006, John Deere, or DE, has risen in price on average 10% in only 48 calendar days. Using options, that could be over 100% return. Now, we're going to have to check and see if it did it again this year, November 19th, January 6th. Well, I think it depends on when I did this slide. I think it was this year. So I think we're good. We have to look at it again on this November to see if that's going to occur. All right. The past performance, again, is not necessarily indicative of future results. So we don't necessarily know if it's going to do it again, but it's something I'm going to watch, right? And then we're going to use our technical analysis, recurring price patterns, all that kind of stuff to kind of decide and determine whether we want to join in on it again this year, with the odds being in our favor. Now, I certainly don't want to be taking a short position on John Deere if since November 19th through January 6th, 2006 to 2023, this thing's been going up in value, right? So that's the kind of thing we want to know as well. Now, if you look along here, this little chart, let me get myself out of the way here. See if I can put me somewhere that's a little bit less conspicuous. How's that? So what you see here on this little chart, these are like little candlestick charts. And so this is per year, and it shows you what the market did. So you can see down here in 2013, 2014, it was a pretty skinny year. It did close higher than it opened, but during that time frame, pretty close. And then 2018, but it's been at least bullish every time. You can see that the market rallied up and then pulled back a little bit on some of these months. And like in 2018, you can see it had a big drawdown and then pulled back up. 2022, it had a big drawdown, pulled back up. Oh, that only goes to 22. So we'll have to wait and see. Here is, how come I can't get it to go? There we go. All right. And then we have this repeating cycle and trend. This is just if you would have invested in this over a period of time, what your little investment chart would have looked like. So that's the John Deere repeating cycle and trend. Now, again, as I mentioned before, past performance not necessarily guarantee of future success, but just because John Deere has risen in price 100% of the time, 17 times out of the past 17 years during these two dates without fail so far, does not necessarily mean it's going to do it again this year. All right. So Werner Heisenberg. How many of you have heard of my Heisenberg strategy? All right. My Heisenberg strategy. Some of you actually have probably taken the Heisenberg Of course, it's free. I just give it away for free. But Werner Heisenberg is a German theoretical physicist and one of the key pioneers of quantum mechanics. All right. And he said, because of our limited observation skills and tools, we can only infer from past experience and knowledge what is about to happen. So that's not only in physics, theoretical physicist, it's also in the stock market. But it also, falls over into the rest of the world too. Past performance is how we judge almost everything. If you're going to go get a job, you're going to put out a resume, right? And that's your past performance. These are things that I've done. Same thing with, when we go and watch sports teams, baseball players, basketball players, football players, we look at past performance. If you're getting a clutch moment and you're at the end of the basketball game, you only have 2 minutes left and you're throwing the ball in from the side, who are you going to give the ball to? You're going to give it to Michael Jordan, right? Because his past performance says that he can perform in that clutch position. When you buy a car, you go look at Carfax, right? See if it's been in an accident, see if it's been wrecked or repaired or something. We always look at past performance to try and determine what the market or what anything will do in the future. It's just kind of the way we do things, right? So past performance is a very important thing, especially in the financial markets. So here's another one. Here's soybeans. This is the January soybean effect. I mentioned this earlier, between October 4th and October 18th. 15 calendar day period, 2 weeks, almost every single year, 93% of the time over the past 15 years back to 2009. Soybeans have climbed in price on average 93%. Return on margin, that's return on margin. That's a pretty good return. And that's 93% of the time. Now, does it mean it's going to do it again this year? No, not necessarily, but it might be something nice to stick in your, a little feather in your cap to remind you to be looking between October 4th and October 18th at soybeans. How about the Coca-Cola rally or the KO rally? We call this the KO or the knockout rally because between March 22nd, April through April 10th, almost every single year, 92% of the time over the past 24 years back to 2000, Coca-Cola has risen in price on average 3% of the time, right? 3% growth in only 20 days. Using options, this would be over 75% plus growth. Now, you say, well, this is just kind of a one-off thing. Maybe this one doesn't, maybe that one doesn't. But it would be, makes sense that if Coca-Cola has this type of a thing, wouldn't Pepsi do this thing too? I mean, maybe the same timing, sometime around the same time Coca-Cola's having the same, Pepsi would kind of do the same thing, right? This is why we kind of have families, right? We call this the Pep Rally. Between March 14th through April 2nd, almost every single year, 90% of the time over the past 42 years back to 1983, Pepsi-Cola has risen in price on average 3% growth in only 20 days. Using options, it should be over 75%. So that's called the Pep Rally. Were you aware of that, or is that an unknown to you? Now, I wouldn't want to be short Pepsi during that time of the year, right? I think I need to do another slideshow where I go through and show you the negatives, because most of us buy and go long on the stock market, right? So you want to see what the market, what stocks you don't want to be in at any specific time. Maybe we'll do that today, because oftentimes when we do this presentation, we go and look at Trade Miner. I'm going to show you Trade Miner, but I'm going to reverse it today, and we're going to look at the stocks you don't want to be in. All right. Maybe in Pitt News Magazine, we should start putting the stocks we don't want to be in instead of the ones we do want to be in. That would be kind of fun, wouldn't it? Now, I could go through and I could create a publication for you. Actually, what this is the results of this have been from Little Track and Trade, the little software program that we use to find these. Little research tool has been published in Barron's, Stocks and Commodities Magazine, Futures Magazine, Pitt News, of course, and Investors Business Daily. So these things are mainstream, not like, they're sideline stuff. This is mainstream stuff. Seasonal Nature Markets, pretty popular stuff. It's been in all these publications. And if you're going against the seasonal trend, seasonal trends, again, as I mentioned, go down. It's kind of like trying to go up a down escalator. You ever try to walk up a down escalator? That's kind of a hard thing to do. Now, it's not hard to do this stuff. I mean, you can do this yourself. You could go get you a spreadsheet and you could create a seasonal strategy for your stock. You could pull up Apple and you could pull up all the history. You go into Track and Trade and go into the data, pull out all the history and put it in there, and you could say, okay, I want to see what all the seasonal natures of the market are. You'd have to do that for every single stock, and you have to keep it updated, and it's kind of a pain in the butt, but you could do it. I mean, it's not like a real secret how it's done, right? You just look at averages and you try to find out what they are. You could do it yourself in a spreadsheet. So if you want to do that, well, bully for you. It's a lot of spreadsheet work, but you could do it. All right. In fact, the guy that I got the idea from was doing it in a spreadsheet. In fact, he came to me and said, "Can you create a software program? Because I'm really tired of doing this in a spreadsheet." And so I created a software program so that you could do this. Now, we could just throw out a newsletter subscription service, right, for $2,000 a year, a newsletter subscription service stuffed with these types of recurring seasonal trends. And you'd admit that it'd probably be well worth the money, right? Probably, if I did some sort of newsletter. Now, I do Pit News Magazine, and we throw some of these in there every Pit News Magazine. So if you want Pit News Magazine, you can get some of these seasonal trends, the ones that I pick every single month. I pick 3 or 4 of them and put them into Pit News Magazine every month. All right. But we have a little tool called Trade Miner Pro. It's a research tool, and it's designed to do this for you. It goes out, it's a little, what we call a data miner. All right. And it'll go out and it'll find these things for you. And it's a really cool little tool. And this little cool tool has been used by a lot of big companies. In fact, the reason it came out in the first place was Simplot. I don't know if any of you know Simplot. Some of you maybe from the Mountain West out here, up in Idaho. There's a big company called Simplot, and they do a lot of commodities work. You know, they're a big producer of commodities, and that's where we actually created the software in the first place, was for an analyst for Simplot. And there are a bunch of big companies that are using this. There's a couple of hedge funds that have this and they use it, and so it's mainstream. It's a good little program. So we're going to come through and we're going to go play with it. I have to tell you that there is a disclaimer. Again, past performance not necessarily indicative of future results, but it's the best we got. So we're going to go through. Let me pull up Trade Miner here. Where did Trade Miner go? I have it right here. Oh, there it is. Okay, so this is Trade Miner, and I'm going to bring it full screen. There we go. All right, it's going to be kind of like a little spreadsheet. All right, and it's going to fill this in. But I know it's hard to see. It's a little small. I'm going to bring me down here in the left corner. Try and make this as big as we can. And you can see up here in the left corner, it's like an AI system. This is your prompt. All right, so it's got a hard-coded prompt, but you just fill in the variables. So it's find and select high probability trading opportunities for my portfolio. We're going to come in here, search for the trends in the month of, and we're going to pick July. Now you can pick individual symbols. You can come in here and drop down the symbols, and you can go find the seasonal nature of specific trends or specific stocks. But we're going to do, I like to come in here and do the month and say everything in the month of July. What should I be looking at in the month of July? All right. So we're going to find trends that have won at least 80% of the time, showing we could do both bullish and bearish. We're going to do bullish first right now. We'll just do the bullish ones, just the long positions. So in the month of July, find trends that have won at least 80% of the time, and list trends that last at least 10 trading days, but no more than 35 days. So we want kind of that. We could even raise that up, maybe do a 14 days. So we do a 2-week time frame to a month time frame. All right, so right around that month time frame. So we want trades to find at least 10 years of history. So they have to be 80% profitable for at least the past 10 years. Now, it doesn't mean they can't do more than that. They can be 80, 90, 100% profitable over 10, 15, 20 years, but they can't be anything less than that. I don't want less than 10 years, and I don't want less than 80% profitable. All right. So we're going to remove the same symbol duplicate start dates. These are just some filters down here. Remove same symbol overlapping dates. And I'm going to hit search now. All right, now this is going to go out. Now, when we first created this program, we would do this section right here, this thing. We would hit this, and we'd go home at night, come back in the morning, it'd almost be done. So things have changed a little bit. Computer power, our knowledge in programming this stuff to make it go faster, all kinds of fun things. All right. So the first thing we do, I'm going to come over here, and I've got some already picked out. You can see that they've already been selected. I'm going to clear these out. So we're just going to come in here, and I'm going to select all, and I'm just going to remove these, remove selected. All right, we're going to come back and start fresh. All right, so what we're going to do is we're going to come in here, and this is our little spreadsheet. All right, now these are all the stocks in the month of July that meet that criteria above. They're at least 14 days long. They're no longer than 35 days. They have at least 10 years of history, and they're 80% profitable. So there's a lot of them. You see there's 493 of them that fall within that category. Now, we also have a little score over here. This little score right here tells you whether they've, kind of, it's a weighting system. Again, if you're familiar with how AI systems work, they have a weighting system. I'm going to show it to you. Come into preferences, and it's right here. See, here's your score weighting. And it has to equal 100, and you can make it say whatever you want. Volatility of returns, how volatile do you want the market? the average return, how important is that to you? Percent accuracy, how important to that? The drawdowns, how important is that to you? And you can set your score and save it and do all kinds of really neat stuff in here. And you can set that score at weighting up. Now, this is our defaults. This is what we like. This is the settings we discovered to be the best. All right. So the highest score you can get is 5. So you can see right here, we're sorted by, well, I don't know how we're sorted by date. We can sort by score, and anything you click on the header, that's going to sort us. We're going to sort by score. Now you can see that these are in red. Now red doesn't mean it doesn't qualify. It does. It's still 80%, 10%. It just didn't make as high of a score as based on our weightings as some of the other trades. So I pretty much ignore the red ones. All right. There doesn't mean they're bad. Just there's so many of them. There's 493. We just can't do all of them. And the red ones don't make as much money for one reason or another as some of the others. So we're going to sort by score. We're going to bring all the green ones to the top. So anything green, look at all the greens in July. July is just such a good bullish month. All right. Look at all those greens. And then we have the yellows. And then, of course, down at the bottom, we have the reds. All right. So we have so many, we just take the very best scores, the highest scores. Now we can just take in here all the 5s. If we wanted to, we could grab all the 5s. And we can do this, and we just select them all out of here, and we add them to step 2, which is the neural network. All right. So we bring them over into the neural network, which is blank right now. And we can just grab all those and say, okay, I'm going to add those to step 2. All right. So those have all been selected just because they have a high score. That's all. But we're going to now go and sort some other things. First of all, we might want to sort by the date and say, well, I want to know some that are, coming up soon. Now, today's the 1st. Look at all the July 1st ones. There's a lot of them. Wow. Look at all those. We got July 2nds. We got July 3rds, 8s, 9s, 10s, 11s. So depending on where you're at in the month and whether you want to look for a stock, you can do that. You can sort by the date. And then the win ratio, I'm going to come over here and I'm going to click by win ratio. Now, the smallest that's going to be in this list is 80% because that's what we put up there. We could change that and say, oh, the smallest I want is 90%. But you can see in here, you can sort it. Now we have these are the 100%ers. And look, they all got 5s. There's another 100%er, Blackstone. It didn't get a 5, but it got a 4.82, but it has a 100% win ratio. So let's click that one and select that one. If we come down here, here's another one that didn't get selected. It's got a 4.34. But it has a 94% win rate. So let's select that one. We just select it like this. We'll select this one. Anything else we want to put in? Here's another 94 that got put in. Here's a 4 point. The CBOE has a 93% win ratio. So 93% win ratio over the last 14 years, 44 days, it's returned 5%. So you could put that one in there if you wanted to. We'd come in here and add the CBOE. And there's Meta. We could put that in there. You can see that you can come in and as we go down through the win ratio, really high win ratios. We can search by years and say, well, we want some that have gone a long time. Well, there's one that's gone 40 years, 80% of the time over the last 40 years, Dominion Energy. If we click on it, you can see the little chart down here at the bottom. Let me get out of the way again. How's that? All right, so this little Dominion, you can see over the last 2023 was not a very good year for it. All right, 2024 was. So we're going to come into here and you can see over the last 40 years, but it's got a yellow. But the longer it goes, the more chances it's got of kind of screwing up. So you have to take that into consideration. So here's AMGN. Now that's a good one. Look at that, 37 years, 81% of the time. Between July 7th and July 29th, Amgen has been 3.75%, has been returned to 7%. That's a pretty good one. Now, it didn't get a 5.0, but that's because we got lots of long history on there, and there's more reds in it, so it turns it down a little bit. Now, I like to come in, and sometimes I like to come in and look at the average profit return, sort of by that. Look at this one. This is a 13% return. Now, that's AMD. And it's got a 1.69%. It's not very long. It's only 10 years, but it's got a high percent ratio. Here's one that's 13 years with 12%. Who's that? That's Monolith Power, MPW. Got a 4.39 between July 3rd and August 20th. 85% of the time over the last 13 years, this thing's returned 12%. That's pretty darn good. Let's put that in our list. All right. So now we have a lot. We're going to come over here to the neural network. These are all the ones that we've put in here. And we can sort by date. Now, July 1st, we have a lot. We have all these that we need to go look at. So we could pull up all these and we can say, all right, these are the ones that it's saying to buy on July 1st. And here's July 2nd. We'll just include July 2nd in with July 3rd. Well, there's July 3rd. We'll just put those 3 right there. So there's ODFL, Old Dominion Freight Line. between July 1st and July 31st, 83% of the time over the last 12 years, 31 calendar days, has returned 9%. Here's another one, Payc, whatever that is, Paycom software, July 1st to July 22nd, 90% of the time over the last 10 years, has returned 7%. All right. Meta platform. So Meta between July 1st and July 24th, 92% of the time over the last 12 years, has returned 6%. All right, so these are some fun long positions, and you can see those, and you can write those down real quick, or take your little camera out and take a screen capture of them and go look at them. That's what I would do if I were you. I'd be out here with my little cell phone snapping pictures of these screens. All right, if you don't own the software. If you own the software, then you can just follow along and you can do these scans with me. But if you don't own the software, grab your little cell phone and go put these up and pull them up in Track and Trade. Now, just because they have done this in the past doesn't mean you're just going to randomly go in there and, oh, well, the odds are in my favor, I'm going to go ahead and just do it. No, you want to kind of look for a good entry. You'll notice that each one of these has a drawdown. See how down here in the little candlestick at the bottom, most of them have a drawdown. So a lot of guys, what they'll do is they'll wait for that little drawdown, see if there's not a point that they can buy into it, and then look and try and get the rally, right? It might not be July 1st might not be the absolute perfect day that you want to get into this trade, but it just happens to be the dates that line up to give you these numbers. And so you'd wait and see and say, well, I'm going to wait for maybe a little drawdown, and then I'm going to get in and take the longer run. And then you get more percentage than the average profit, because that starts from July 1st. And if you get the drawdown, you might get a larger percent increase. So you're going to trade it normally. I want you to still trade it very normally, but these are some things that you want to be aware of. All right, so that's fun. We're going to come back here. Now we're going to come back to the search, and I'm going to research. I'm going to come in here. We're going to still do the month of July, and we're going to do 80, but this time I'm going to do bearish. All right, 80% of the time. Let's stick with 80 for now. We can change it, and we're going to do bearish. So, let me get out of the way again. I'm always in the way. Always in the way. How can I get out of the way here? I think I could be in this upper right corner, and that's not going to bother anything. Those are just settings. All right. So this right here, you're going to see that we're going to go bearish in here. Now, this is going to tell us what stocks we don't want to be in the month of July. All right. So we're going to come in here. We're going to hit search now. And that's going to tell us which ones we don't want to be in. Now we're going to hit the score again. We're going to find the ones that have the high probability of going down in this month. So all these green ones, right? So we're going to come in here. We're going to say, okay, we don't want to be in Henry Schein. Why? Because, these are some older ones. It's starting in July. Let's bring up, let's see. Let's clear out this. Let's remove. It's easier if we just move it over. So we're going to remove all the longs. We're going to come in here, sort by score. And well, these, you might just want to look at all of them, because you're like, which one am I going to be in? Might be in one of these. So these are the ones specifically don't want to be in. So let's just take all the greens, or you might want to take short positions on them, right? So we're going to add them over here. So we're going to add to step 2, and let's see some big losers. Let's go profit. Oh, there's another big loser right there. Some of these lose big, so we have all them in our list. Lose big. And then long period of time they've done it a lot. So there's some that have done it a lot and lose a lot in a long wave back. They've been really bad. So we'll take a bunch of these. And win rate, that's good. We'll come over here to our step 2 now. And these are the ones that are really bad. So these are stocks you don't want to be in the month of July. So let's sort by the date. We'll just come down through here. July 1st to August 6th. 83% of the time over the last 12 years, this thing's lost 5%. So don't be in Occidental Petroleum in the month of July. Are you in Occidental Petroleum? If you are, take that into consideration. All right. This thing's lost money 5% in the month of July, 83% of the time. How about Paramount Global, Intel? INTC between July 23rd and August 22nd. Now, this is towards the end of July, not the first, but July 23rd to August 22nd. 80% of the time over the last 10 years, this thing's lost 10% on average. That's a big loss in Intel. Don't want to be in Intel in the month of the July-August time frame. That's not a good move. All right, here's another one. Let's go see if there's anything else that we recognize. Look at that. Ford Motor Company between July 24th and August 22nd. 80% of the time, this thing's lost money, 7%. Starting in July 24th. Don't want to be buying into some new Ford right there. Dollar Tree, General Electric, there's GE. July 29th to August 20th. 80% of the time over the last 15 years, that thing's lost on average 5%. Corning, July 29th, August 22nd. Don't be in Corning. Wynn Resorts, Micron. Oh, Micron, July 30th, August 22nd, 80% of the time over the last 24 or last 10 years. This thing's lost 7%. Be careful with Micron. A lot of us hold Micron. Comcast, well, I don't know how many of you hold Comcast. It loses 2%. Colgate Palmolive, July 30th to September 8th, 81% of the time over the last 16 years. This thing's lost money. Roper Technology, Abbott Laboratories, July 30th to August 19th, 81% of the time. It's lost 1%. Warner Brothers, Fremont, Franklin Resources, Western Digital, Henry Schein, API, Baker Hughes, Eastman Chemical, Waters Corp. There's just some losers in there. These are companies that you just want to be very, it comes back to that thing where what you don't know can hurt you in the stock market. So if you're in there trying to buy some of these markets, Ford Motor Company between July 24th and August 22nd, 80% of the time, this thing's lost 7%. Does that mean that's going to do it this year? No. But do you want to bet against an 80% chance that it's going to lose money that month? Why would you take that chance when there's other stocks that we just showed you that have an 80% chance of making money in the same period of time? So if you're a trader, you want to be mindful of that, right? If you're an investor and you're like, well, I just hang on to my Ford Motor Company, I don't care if it goes up and down. Well, you might want to look at a hedging strategy, right? Maybe buy a put option to protect your position so that if it falls 7%, you can kind of protect that loss a little bit. And that's what this is for. It just kind of gives you a little heads up on, historical trends of market cycles. And I think it's important to know. All right, that's our seasonal trend talk. And I want to now jump over to our portfolio. So we're going to jump over to our class portfolio. And I got to clear my throat again. I'm going to turn off the microphone, but watch, I'm not going to let go of it. All right, I'm back. I've got it turned on. The microphone is on. I swear it's on. It shows that it's on. Wait for a second. It's not going off by itself. It's still on. All right. I think it's going to stay on this time. All right. So we're going to start off with the S&P 500. The S&P 500, of course, is our backbone of our market. We always want to watch the S&P. The S&P is like, the big mama that everything walks beside. It's nice and friendly big mama. We've got to keep the S&P always in mind, all right? So I'm going to come in. And you can see we got a lot of trading going on here on the S&P. Where is the S&P in our list? We're right down here. S&P, PQR. There it is down here at the bottom. So we're up $2,760. Let's bring up our control panel. And we're going to bring up our positions, chart only. So we got a lot going on here with the S&P. So we got a bunch of positions. So what we did is we bought a long call right here. And I think we bought one down here earlier. Did we? I can't remember. But I think we bought one down here early and rode this up. And we bought one on the B1. And so we've ridden that one out. And then this one came in. It's actually, I don't know if I labeled it C1 as if this was the B drive, and it's all just kind of this one drive in here. I don't know. Hindsight's going to have to tell us, but it broke the blue lights. And so that's the most key point right in there, is that it broke the blue lights. And here it broke the blue lights. And so every time it breaks the blue light, it's a new start of a new drive. All right. So you have A drive, B drive, C drive. And so because it broke the blue lights, it's the B drive, and it was tiny. And then it came down and it broke the blue lights again. So that means it starts to go up. That becomes the C drive. It is what it is. It is. You have to count it the way it is. Now, it may just all be one drive. And in the hindsight, we'll look back at it and we'll get 3 nice drives. And that'll just be kind of a flippy floppity thing that happened there on the B drive. I don't know. It doesn't matter. It's a C drive. Now, the problem is that once we get into the C drive, your probabilities of success fall significantly. That's why it does matter. So the point that doesn't matter is, well, it broke the blue light. So it's a new drive. Yes, but it's a C drive. So the C drive has a much lower probability of success than the B drive, but the B drive sucked. So this may just be a little reaccumulation and a new B drive, and away we go. Well, like I said, time will tell, and this depends on how we want to what kind of risks we want to take. All right, because that's how you trade. You look at your probabilities, and the probabilities of a C drive going are, it's good. You generally get enough movement in a C drive for it to make some money, but it's generally not the best. So before we get a pullback. So I'm a little disappointed in this little section right through here where the B drive just kind of died out on us. All right. Now the market really, let's clean out all the drawing. Well, let's not do that. Yeah, let's clean out. Well, let's not do that. Let's clean out the drawing tools we don't need. The little three, let's get rid of the lines. Let's get rid of the Fibonacci ruler I want to put in here. The thing is we didn't get a Fibonacci retracement like we wanted. So even off of this one here, we didn't get a Fibonacci bow tie. All right. The bow tie didn't come in for us. And even if we bring it up to this point here, the bow tie didn't come in for us here either. I mean, it's not coming in. We're not getting a good bow tie. What would be a Fibonacci bow tie? It would have to come back down into the Fibonacci sweet spot, which would be down into here. Now, to get the bow tie, let me just come up here and give you a little bow tie lesson. Fibonacci bow tie is just a way of identifying markets that rally, they pull back, and they rally, all right? And then they pull back, right? So it's the Elliott wave pattern that you're looking at. But the bow tie is that you take this peak right here. So any peak, and then the market, when it breaks above the peak, which would be right here, right? We want to anticipate that the market breaks above the peak right here. Now, usually we'll have the blue lights in here, and the blue lights will come in the mathematical model or the parabolic SAR, whichever one you're using, whether it's the blue lights or the PSAR. Blue lights a little more accurate, but you can use the PSAR if you don't have it. And so you get these kind of blue light crossovers, all right? And so that's what we're really looking for. But down in this little pullback, this is where we come in with this model where we put the Fibonacci ruler in there. And we like to see the market come back down into the Fibonacci sweet spot, which is right there. 61.8 is the golden ratio, but 38.2 is very common for a strong market. Market will come down to 38.2 and then rally and go back up from there. But nonetheless, what's happening is you're getting this little pattern in here where you got this high right here, which is really important. You got the Fibonacci sequence in here. Then you got the breaking of the previous high, and then you got the rally point up in here. Now, the point is, Wells Wilder did a tremendous amount of work on this. All right, this is a Wells Wilder thing. So this is called a reflection. Now, Fibonacci, Larry Pesavento does a lot of work on this. The Fibonacci guys are really big into this. Land Turner done a lot of work on this. So you come in here and you go from this point, which is a really important point, a high point, down to the pullback. And then this reflection should be from this point to this point. See this little triangle in here? It's a triangle formation. All right. And then we should see a projection of the same distance. So that should be right up there around 200%. So the pullback, you measure from the low of the pullback, and then that tells you that we generally anticipate that the market going all the way up to 200% or the same distance. That's really what we're doing. The same distance from here to here as we go from here to here. All right. Now, inside here somewhere, you're going to get a little crossover. You're going to get the blue lights, and they're going to come in and they're going to cross over down in here somewhere. That's why we call it the spider web, because we're going to get a natural break at the trend line down here. We're going to get a mathematical model, and then we're going to get a horizontal break above here. That's the spider web. All right. So this is how you read this pattern, and this is what we'll call in here when it breaks down in here, the blue lights. Right. We'd call that a B1. So that's the new B drive, because this one back here, this is the A drive. So this is the B drive. Now, where does the B drive go? Well, the B drive goes where the blue lights cross over. But you have an earlier, down in the valley so low, down in here. This is the natural breaking, right? So this is your natural trend line breaking. Then you have the mathematical break, which is the one that I generally like to land on and say that's the B1. This is also the B1, but it's an early B1. The mathematical B1 here, and then you have the crossover of the previous high, which is also a B1, but oftentimes can end up being the B2. All right. So this is B1. This is also B1, but they're early. This is the early B1. This is the B1 when it crosses the blue lights. So if we want to just be technically correct, we just call the crossing of the blue lights the B1, but don't forget that you can also enter down here on a crossing of the natural trend line. It'd be the first green candle to break a new high down in here in this bottom region. All right. So that's your B1. Now, what happens is we anticipate this market coming up and making the same distance up in here. Now, sometimes you get little flat bow ties. Now, this is the bow tie pattern. So this is why I call it the Fibonacci bow tie, because starts here, comes down here, goes all the way up there, and then comes back to the previous high, which is right there, and you tie it off like that. So that ends up being it looks like a bow tie, right? Little thing that goes on your neck, looks like a little bow tie. So that's your Fibonacci bow tie. Down here, up here, back here, and you tie it off. And so the support level, this is where resistance, which is right here, becomes support. So resistance becomes support. So this previous high, and that ends up being a bow tie. And we expect the market to come back down to the bow tie and then turn around and start to go back up again and create another bow tie. All right. So that would be going into the C drive. So these little bow ties are very important. Now, the problem is that we don't always get perfect bow ties, right? Some of us are just little high school boys. We don't know how to tie our bow ties very, very well. Okay. So the market ends up with a little shitty bow tie like this. All right. So that happens too, where you get the market just goes up and barely breaks above the previous high, and then it turns around and fluffs back down in here, and you get a crappy little bow tie. Or sometimes this market goes way up here and makes a really big bow tie, and that's really cool. We love that because we make lots of money when that happens. But these little fluffy, lousy bow ties are the ones that kind of give us a little pain in the back, right? We don't like that. And then the other problem is sometimes this one down here comes and it doesn't go deep enough. And so it comes up and it gives you a little shallow bow tie on the downside. All right. And then it gives you a little shallow bow tie on the upside. So you end up with these little shallow bow ties. So bow ties can be, lots of different shapes, but the whole point of the matter is that we're looking for areas of support to become resistance. However you tie those bow ties off is going to be your little bow tie and determine how deep it goes versus how long it goes. The little bit deeper it goes, we generally anticipate a longer rally. If it goes a little shallow, then oftentimes you'll get a really tall side to the upside because it's strong and barely gets back to 38.2 or 28.6. It'll take off and go again because it's really strong. So you'll get kind of a real strong upside bow tie. So there's lots of different patterns that you can anticipate when getting these bow ties, but nonetheless, that's a Fibonacci bow tie. So when we come down and look at this, we say, well, where's our bow tie, Len? Well, we're going to start with this previous high. We got a real shallow bow tie. It came up here, created another real crappy bow tie, but when it came back down and touched that previous high. So that little bow tie, although ugly, tied off pretty darn well. All right, from here to here, it went up and back down to here and tied off the bow tie right there. All right, so now we're starting a new bow tie. Now, this is really important for you to understand these bow ties because this is where you're going to buy and sell. These are your triggers and setups. So now we got a previous high right in here. All right, so this is our previous high. This is how far it pulled back. The anticipation how high it's going to go before it comes back and ties off the bow tie is the question. How high is that market going to go? What is the reflection going to be? Now, oftentimes when you have a shallow bow tie like this, you get a bigger run out the other side because the market was too strong, the strength for it to pull back far enough. We didn't get the good bow tie. So we're going to get a little shallow bow tie here. We might get a good run here before we get up and go into a C2, a C3 before we get up to the peak. So I anticipate that this bow tie right here, this might be a good strong rally right in here. That's the point I'm trying to make. So if that's the case, then we can take this idea off of the S&P 500 and we can go and apply that now to other markets and say, if we anticipate the S&P is going to have a pretty good strong run right here, we're going to go in and anticipate maybe some of these other markets are going to have good runs too. And we can consider that as part of our decision of making an entry into some of these other markets. Now, the question is here, let's point out what we got going here on the S&P. We're up $2,700, which is good trade here on the S&P. We got we bought a long call here. We got a long call here. Both these long calls are making money. The market's taking off. There's 1, 2, 3, 4. We could take some profits off of this, or we could just let them ride. Right now, I think we got a good enough push on this thing. I think we're going to let it ride maybe a couple more days going into the weekend, see what happens. 4th of July weekend, kind of gets a little weak up in there. But the push into the weekend is usually pretty good. All right, so maybe we'll let this go another couple of days. So you can see down here on our indicators that the MACD is starting to push green. So we're okay. I think we're going to hang on to it. All right. We're not going to take the profits off too quick. But then down here, we sold all this premium. So Receive 374, profit and loss 339. There's only $34, $25. There's $93 left in this one. But these two have pretty much got their full max profit. There's really no reason to hang on to them at this point because they've already got max profit. So we're going to come in here, we're going to liquidate that option. And let's see if it'll let us liquidate two at a time. I don't know if it will. No, we're going to have to liquidate one at a time. So we're going to liquidate that one. And we just come in here. Let's see if it'll market order out of it. I don't know if it will. Might want a limit order. Let's leave that one on. Let's lit, and then we're going to come down to 25. Let's see if it'll let us out of that one. No, it's not going to let us out. All right, so we got a little issue here. It's not going to let us out. Oh, there went one. It took it off. So let's see if this one takes a little bit. Give it just a second. I don't know why it takes so long. All right, we'll just leave that on there. We're going to leave that one on. This one here, we're going to go. All right, so that's the whole issue with the S&P 500. Let's come over here and let's look at GE and Genova. Now, GE and Genova, we got in on that B1. So that right there is a B1, and it's dying on us. That's not a good sign. We're really high on this, and I really hesitated to put this one on, but it was a B1, and the S&P 500 was showing strength. So this B1 is where that thing's at. And we're down $760. Whew. That's not good. That is not good. All right, here's IBKR. IBKR. We could cut our loser short on that one, but since it's dropping, rather than do that, let's come in here. I got an idea. We'll come in here and we'll go to 17 days out and we'll sell a call up here. Maybe what we can do is collect some money. That's $102 on that one. That would help a little bit. We got to buy a call. Put a little spread in up here. I don't know if it's going to let us do this. Let's come down here and look at the options chain. Ugh, the volume on it is nothing. It's dead. That's not going to let us do that anyway. Let's not do that. All right, we're going to have to just wait and see it. This might be a bad, you know what? Your first loss is your best loss. I don't know. It's a good, strong B1. I hate to cut it and only have that thing turn around and take off and go to the moon. We got 108 days on this thing. Fibonacci ruler is all the way down here to, so we're going long on the B1. Do we just want to cut it right here and let this thing come down? See if it's going to come down, or at least come down and break the blue lights. And then turn and go. We could have another dip in here. We paid $5,800 for that thing, and it's already down $700. That's what I get for buying on a big green bar. Paid a premium for it. I think we're going to let it go because it's a big red bar today, so that means it's going to lose a lot on just today. Let's hang on. We're going to hang on to this one. We're just going to bite our fingernails for a few days on that one. All right, so Interactive Brokers, we're on our, this is that little B1C1 thing issue where we got kind of that little, I'm going to call this a reaccumulation stage where the market just kind of reaccumulated because it couldn't get the market to draw back down into the Fibonacci sweet spot where they'd like to buy a whole lot more. So it just had to go sideways for a little while to see what was happening. But this is a little break right here, and see it broke twice. So this ends up being B1 and C1, and I don't like that. I really want to just call this a one big B1-2. How's that? We just make something up. Make shit up. All right, that's what we do here. Okay, so this is a B1-2. We got a second B1 on here. I don't know. It just reaccumulation stage, but we're long right here. I anticipate a break of this thing and continue higher. All right, I don't want to call it a C1 because I think that we're going to get a C1 up here. I think this market's going to come up, and I think we'll get a C1 and it'll just keep going. All right. So here's IonQ. The question is, do we want to put some sold options in here and collect some premium while this thing goes? I think we're going to be good here. We could probably come in here and we could go out. let's say 45. We got to have some volume open interest on this thing. See if there's any puts in here. There's just nobody trading it. That one right there, there's a few people trading. That's it. There's just not enough people trading this with options to come in here and try and sell one. If we tried to sell that, well, that's selling right where we bought it, so we can't do that anyway. All right. We could make it a free trade. We could do that. We could make that a free trade. Buy a call and sell a put right there. And that would give us the premium. How much would it give us if we did that? Probably wouldn't be free at this point, but it would be close to it. Let's say we sell that. It'd give us, 135 bucks against our paid 1,000. Yeah. 135 bucks is 135 bucks. If we think this market's going to continue to rally, and I do, I think it's going to go up. It's just how strong. July is usually a good month. Could give us $135. I don't know. We could try it. We're going to sell it. We're going to go to 130. It's going to cost us 10 bucks. Let's see if it'll let us have it. Nope. Poof. Disappeared. No, it's still here, down here. Is it there? I think it did fill it. Nope. It just disappeared. I don't know what happened to the options. We're having a little problem with the options here. All right, so charts. Let's go into INQ. B1, IONQ Inc. We already have everything going here. If anything, what we'd want to do is we'd want to sell some premium, but let's go see if there's any volume on this one. There's no volume on that one either. I'm not going to get rid of this one because I'm anticipating a rise in price. MSTR. Ooh, that one's not good to be having them. MSTR, we want to have that thing go up. I own a lot of this stuff in my real money account, and that's one of those ugly A1, B1, C1 things. I want to call that a B1, a B1-2. Not that one. That was a mistake. Delete that one. Delete all notes. No, just delete this note. B1-2. I think this is a B1-2. I don't want to call that C1 yet. I want this to be our B1-2. I think it's just going through an accumulation stage right in here. How far back did it pull against our Fibonacci numbers? Well, it came back to 38.2. It's riding right along 38.2. I think we're going to stick with it. All right, let's come down here to 60. Oh, that's just shares. That thing's peeking out up in there. I don't like that. I don't like that at all. We got 26 shares. Let's come in here, 25. Let's just put a stop order in there. Just right at break even. If it comes back, I don't want to take a loss. All right, NVIDIA. Well, that thing's taken off and we don't have one in it. Oh, look at that. It's a 1.B1. I hate those. This is our one standard deviation. Never even give it just 1.B1. Let's wait and see, because this gives us a two. We'll wait for the first. If this comes back 2 bars, 2 little red bars, first or 3 or whatever. First green candle to make a new long. We're going to buy first green candle to make a new long on this B1. We're going to buy a new option to a long position on NVIDIA. But we're got to wait now because we missed that one. OKLO. Ooh, isn't this our little, I took my profits off of this one. I made about $2,000 on it. I was pretty happy with the trade. Now it's coming back, but it broke the B1. Oh, look at that. So if we take our Fibonacci ruler, I don't like that. We don't want to do that. That's a reset. Oh, what's it going to do? What's it going to do? I would like to get back into this. I think this has a big future. It's isn't OKLO. Isn't if I remember correctly. If I remember correctly, OKLO. Isn't this the nuclear plant company utilities? Yeah, they make nuclear. Remember, this was the one that was the president of this company was in the White House when President Trump signed the the executive order allowing municipalities to start making little nuclear weapons, not weapons, nuclear plants in their towns. So like Logan, Utah could have our own little nuclear plant over there. They make these, they got a little nuclear, reactor up in Idaho, out at the laboratory there. And they could take these little nuclear just in, the ones that they put on like submarines and on aircraft carriers. Those things are run on little tiny nuclear. They could run a whole city. Well, Trump signed an executive order that said, well, why don't we bring those things in and let cities have their own little miniature nuclear plants? This OKLO builds those. That's what they do. And they were in the White House. They're just a new company. See that? Just announced a new nuclear fuel deal. So these guys were in the White House when he signed that. And so I bought some I think it was like right down in here somewhere. The market had already taken off. And I wrote it up and I got out and took my profits off of this thing as it started to turn around on this little ABC. But I would like to get back in. Let's get back over here. So I would like to get back into this. But this is a B1 and it's a B1. Well, it's a B1. It's a B1 fail. I would call that a B1 fail. Anyway, we're going to look for this market to dip back down, and we got to kind of watch it. I don't know where it's going to give us a pattern for opportunity to get back in. We may have to just, when it gets back down into this region somewhere, we'll start putting on 10%, 20%, 30% of our position that we want to get into. It'll just kind of ease into it, all right? Because I think this thing has a nice future for us. We can make some money on that one. Palantir, of course. Ooh, look, Palantir's 1 minute chart. That's the 1 minute chart for Palantir. But that's okay. It needs to sell off. Now, a bunch of us own this PLTY, right? Don't freak out. You're going to have a little drawdown. That's all right. But we want to just use this to get back in because we like Palantir. They do evil things. They're an evil company. And so they're government contractor. So with the military. So you know that they're going to get lots of contracts. Is that a good reason why? Is that my logic, my fundamental logic? They're a very evil company and they do very evil things. And so the Pentagon is going to want to buy a lot of their stuff. So we're just going to look for an opportunity to get back into this thing. Now, they just become part of the S&P 500 not too long ago. So that's why I believe they have a good future. All right. We're really excited about Palantir. I just want an opportunity to add more in. I've got a bunch of money sitting on the sidelines that I've received in dividends, and I haven't put it back in yet. I'm just waiting for these markets to all draw back down and give me an opportunity to put some money back in as they make their little ABC patterns. They're little long-term, right? I'm looking for this. So I'm looking for it to pull back into here, and then we can start really getting serious about loading up on them again. So in the meantime, just let your dividends come in and don't reinvest them. Just let them sit there and wait until we can get a really good opportunity to put into some of these really good high dividend earning stocks, PLTY. So not yet. Hold your horses. I know you want to put some in right here. Don't do it because the bigger one is still falling. So let's give it a little more time to fall. Let's get a little pattern down in here. See if it won't come down here a little farther. I would like to see it back into at least down in here somewhere. I mean, when I look at this thing, I'm looking for a strong area of resistance. We got one here, right? We got one here. We got one down here. So these are some places where we might see this market come down and test. Plus, we got the Fibonacci numbers in here. So we got, But we just need to see the pattern. We need to see it come down, create a little down, up, reverse. Boom, we can start getting back in. All right, so that's B. Oh, look at this baby. Rocket Labs. Holy cow. This is what we want to see Palantir do. We want to see Palantir pull down into this little trough like this so that we can get a first green candle and woo, away we go. We missed this one, but this is a good one. Might come back down here and then take off again or give another opportunity to get into that market. SMCI, Super Micro. We got into that one and it's doing okay. Not hugely right now, but we're in on the B1. So this is the B1. Second drive of our Elliott wave. So let's just see if that one, 4 bars, 1, 2, 3, 4. It might get a little pullback. This is the July week. I don't know. And then second week of July, maybe this thing will take off and go to the moon. S&P, we already talked about that one. We're doing good. We're up 2,400. All right, we got a couple more down here. Let's just jump down to, I wanted to look at AT&T. Oh, AT&T's got this little triangle wedge pattern thing happening right here. And it broke that yesterday. That's a good sign. You want to put some in on AT&T. It's a big rally day today. Let's see if we can't get just before the weekend. Let's see if we can't get a little tiny small pullback day and get the implied volatility to go down. Well, implied volatility. Well, let's see. Let's go out 100 days. Oh, look at how rotten the volume is. You guys, nobody's trading these things. How come we haven't got any friends? We've got no friends. Got a lot on the open interest. A lot. That's the put options. I want call options. What am I doing over there? Okay, 80 days. Let's go look at 80 days. Look, no friends. No friends. 88's all that's traded today. The week before the 4th of July. I think we're going to have a real, look at this. Somebody got excited right there. 108 days. You want to put that one on? I don't. I'm going to wait. And the reason I'm going to wait is because of the 4th of July weekend. I'm going to wait and see if we can't get just a little bit of a pullback day. All right. I don't want the implied volatility. Yeah, it's not very high. It's only 23. The premium is 145. The theoretical value is 164. So you're actually buying it on for a discount. It's worth 164. You can buy it for 145. But it's on a day of a big rally up day. I'd not like to buy it on a big rally up day. I'd like to buy it on a small day, but $145. It's not bad when you could buy them when they're theoretically worth $164, and you got some volume in there, 1,000. Somebody got excited about it today. But look at all the other volume on there. Just awful. Just terrible. I mean, open interest is big. This is a nice break day. Yesterday would have been a better day. But it is what it is. We didn't look at it yesterday. Let's go ahead and put let's put a couple of these on. They're not very expensive. $145. See if we can get into it. 146. I don't know if it's going to let us into it anyway. We'll just leave it. We'll just leave it pending. See what they do. All right, Toast. It's going through that same sideways thing. I would like to see it pull back. Actually, I would like to see it drop out of the bottom of that thing. Reset. Give us a good little pullback into the Fibonacci sweet spot, and then we can get into this thing. I hate this. This is that reaccumulation stage. I hate reaccumulation. I wish it would pop out the bottom so we could get in down there. We don't want to get in on the breakup because I'm worried it'll break up like that and then false break and come back down. But usually it's 3 times a charm. There's charm 1, there's charm 2, there's charm 3. So when it breaks those blue lights again, it should go on that one. But let's see if it won't pull back and give us an opportunity to get in down here. I'd like to get into Toast. Toast was 100% winner last year, made 100% gain. Targa. This one kind of sucks too. It's kind of dying here, going through the reaccumulation stage. I don't like that. How many? We're long 120 shares. Let's put a little. Is that 120 or just 20? That says 120 positions. 120. So let's put in 120 and we'll just put a stop right here. I don't want to fiddle with it. Well, I don't know. This is Targa. This is the 100%er. If it pulls back, you know what we could do? That's $20,000. We're up $384. You know what we could do? We could just take half of them off. What's half of 20? 50, 60? Let's just put 60 in here. Put 60 in there, and we'll stop out 60 of them like that. So we'll take half off if it comes down and stops us out. And then we'll put the other 60 in if it comes down here and tests this low. And we'll just put them right back in down there. How's that sound? That sounds fun. I like that strategy. All right, we'll do that. How about Tesla? Tesla, we got a pending. We're going to buy if it hits the 61.8. I got a buyer in there for 30 of them. That thing's pulling back. We're going to buy on 61.8. It's just inside the Fibonacci 61.8. Maybe we'll go just a touch higher there. Just make sure if it comes down and tests that 61.8, we'll buy right there. It's testing 50% right now. It hit 50% today, so we'll see. All right, Tesla, we're going to, yeah, this is sad. I don't want to see Tesla fall. Doggone it. I want this arrow here, this arrow. Come on, guys. Not that arrow. Elon's having a struggle with his robo-taxi. All right. United Airlines. Trying to break out. This is charm 1. This is charm 2. It's that same thing. It's a B1-2. So we may get the little pull. You know, we still got this week to get through. We got to get past the 4th of July. Vertical Holdings. Looks like it's not very strong. We're getting a red bar again today. That would be a B3 if it red barred out on us. Don't want to be long right here. That's a real low probability of success on that one. I'd rather see it break that. It might go into that little, you know, it might do that little sideways thing where it comes back down here again. And then does that little thing like that. I'd like to see it pull back a little farther. Vista. B1. Here's coming into B2 right here. We'll get B2 today. Unless it breaks the blue lights. If it breaks the blue lights, it won't be B2. Well, yeah, it won't be B2 if it breaks the blue lights. It'll be C1. This market is on fire. This thing just took off and went straight up. It broke the blue lights and straight up again. So we'll have to wait and see what that one's going to do. We got to get an opportunity to get into this thing. That A drive was unbelievable. Look at that thing. Wow. And then the B drive, that was a pretty good B drive right there so far. Wow. This thing is on fire. All right, guys, that's it. That's all I got for you on this front. Let's go over and look at my spreadsheet real quick. We'll just pull it up. There's not a lot to do on it. I could pull up the class spreadsheet, but the class spreadsheet I haven't updated in a long time. We need to probably do a whole class to go in and update it. I just pull this one up. You can just a quick review on what's going on with my real money account. It says 259. Let's go into data and refresh that. Let's see if it changes. 259, 253, 63, 253. 253. It went to 442. So I made $200 today so far. That's not bad. All right, that's what that says. So what most people want to see is they want to see this little table. So just to show this little table to you, this is what's going on. This is my symbols that I have in my real money. This is just one account. I have like 10 of these. I have a traditional, I have an IRA, I have a SEP, I have an HSA, I have a couple accounts for my wife. I have, a bunch of stuff in here. But we're going to come in here and these are the symbols that I have. Now, just because I have these symbols doesn't mean you should have these symbols. I look at these and I wish I didn't have some of them. All right. And I wish I had others. And I wish I had some that I took out. Did you see? Did you see? There's a couple of them I had in here. What was the one? I can't remember the symbol. I was looking at it yesterday. I was like, man, I had that one, and it's gone to the moon. What was it? Coinbase. Let's go look at that just real for fun, because I had that one, and I took it out of my. But I don't feel too bad because I just took the money out of Coin and I put it into Palantir, which did really well. But look at Coin. Bam! Look at that, baby. I got rid of it right in here somewhere because I put it into Palantir instead. And look at that thing, went straight up. Oh well, it is what it is. You kind of make your decisions and you have to live with them. But it wasn't a bad move. I had to put into Palantir, and Palantir's been doing really well for me. So I don't complain. Palantir gave me $12,000 in May. And in June, it gave me $7,000. With much was the investment in Palantir? I have a total of $141,000 in Palantir, and it's returning to me 7,000, 12,000, 8,000, 6,000. Here's where I put bigger money in. You can see it was only at 400. The only reason this is purple is because I like put that in there just to say this is how much I'm going to have to pay in taxes, like the first 2 months of my trading. So 29,000 and 26,000, I'm going to have to give about $60,000 in taxes so far. $60,000 to Donald Trump so he can go blow up shit. All right. So in the month of June, we came out. That was the final tally, $31,800. You can see I got 2,000 in YMAG, 800 in YMAX. Misty, 7,900. Snoy, 3,200. Tesla, 4,600. Ybit, 3,700. PLTY, that's $1. Mr. PLTY, how come you're not the dollar sign? And also NVIDIA is $sign at 1,971. That was low. Last month I got 4,700 out of NVIDIA. This month I only got 2,000. So for a total of $31,000 is what I made last month in this one account. And I have, like I said, about 6 others, but this is the biggest one. The other ones are only about half this size, or little. Yeah, it's about half this size. So you could, if you kind of derive, you can. My traditional IRA is about half this size. I'd take you over and show it to you, but it's the old spreadsheet, so it's not all accurate anymore. I've got a lot of work to do. It's a lot of work to keep the spreadsheet up, and I'm getting pretty happy with it. I think the math is pretty well there. And if you would like to have this spreadsheet so you can run your own portfolio in it, then all you have to do is subscribe to Pitt News Magazine, and you get it with it. It comes in the email. It'll have a link to the spreadsheet. You can go download it and update it with your stuff. All right, John says mini nuclear reactors. Yes, that's what they are, mini nuclear reactors. All right, guys, that's about all I got for you today. I better sell you something while you're here.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, and then everybody wants to see Claire's ad.
Hey, Claire here. Guess what? Mr. Turner handed me the mic. I've now got my very own podcast, Pitt News on Air, your new weekly hit from Pitt News Magazine. Join me every Wednesday for stories, interviews, and a little behind-the-scenes scoop. We're live on Spotify, and yep, now on Apple Podcasts, too. Visit pittnews.com to follow. Come hang out with me and the gang. We're all there. Jake and Lena, of course, Lan Turner, David Duty, Dr. Scott Brown, Jordan Black, and even Aiden shows up on occasion. We're having a world of fun. Don't miss out. Pitt News on Air. Because news should never be boring. It's where your trading friends are. Follow us wherever you get your podcasts.
All right. So Claire dropped a couple of personal little shorties of her. I asked her to just do some selfie ones instead of just intro and outros. So she's trying to do a little bit better job telling stories of her own. So go over and look at Claire's podcast. And tomorrow she's got a another one dropping tomorrow. So you get another podcast tomorrow. And there's no charge for the podcast. You can just subscribe to those because podcasts are free. They're out on the podcasts actually show up on the YouTube channel now. So you don't have to go to, they're also on the YouTube channel. So if you want to see Claire's podcast, go to the podcast. And of course, we got to run this guy right here.
Look, folks, I was reading this thing, Pitt News, right? Great stuff. I mean, back in Scranton, we had newspapers, but I didn't have, you know, the thing with the facts. Claire Christensen, she gets it. Sharp gal. Reminds me of my Aunt Margie. Could parallel park a Buick with one hand. Subscribe.
All right, guys, we're going to let you go. If you have any questions, let me know. And we're going to come back tomorrow afternoon at 1 o'clock in the afternoon and do a little day trading. And we will see you tomorrow afternoon. So don't forget to show up and have a little fun day trading tomorrow afternoon at 1 o'clock. We'll see you then.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.